As the real estate industry, we're at a very pivotal moment. We're opening doors to global capital, institutional participation, and financial innovation has become the cornerstone for our growth. REITs, structured products, new capital frameworks, they're all transforming not just how we build, but also how we fund and how we sustain our vision for the future. And so our next session brings together global financial leaders who are shaping the next wave of real estate evolution. On this panel, we have the chairman and founder of ANAROCK Property Consultants, widely regarded as the foremost voice on real estate markets in India. Also joining us is Senior Portfolio Manager for Real Estate at APJ Asset Management Asia, who's based in Singapore, and a very strong advocate for diversity in real estate, mentors young talent, and drives inclusion initiatives across the industry. Also joining us is Head of Asia Pacific Oxford Properties, a leading global real estate investor, asset manager, and business builder. And we also have a Senior Managing Director and Head of Real Estate Asset Management Asia at Blackstone, who's held several roles earlier focusing on pan-India real estate investments and asset management. So please join me in welcoming our power panelists on stage, Mr. Anuj Puri, our moderator, and joining us is our panelists, Ms. Sarah Winbur, Mr. Alessandro Fiascaris, and Mr. Vikram Garg. They're here to talk to us about the next wave, REITs, financial innovation, and the evolution of real estate finance.
Well, good afternoon, everyone. We can lock the doors because there is a lot of money that is sitting here. Those who are outside the room will not get any money. Those who are inside the room will get all the money. So my suggestion is, guys who are outside the room, if you want to come in and get some money, you better get in before the doors shut, because we have three very large investors that are with me. You can see their names at the back, and it is absolute delight and pleasure to have the big stalwarts from this part of the region who are responsible for investing in India come and address us. So I have Sarah, Ali, and Vikram from APG, from Omers, and from Blackstone. And so we are going to have about 40 minutes of discussions, very interesting discussions. But before that, I'm going to request Sarah, Ali, and Vikram to do a small introduction on their investments in India so that it becomes a lot more relevant. Guys, they know India very well. They have invested a lot in various categories in India. And I just want a minute if each one of you can give a brief of the investments that they have done and in which asset class. Sarah, to start with you.
Sure. Firstly, thank you very much for the introduction and for the invitation to be able to speak on such a great panel, esteemed panelists. Very much appreciate the support that we've had from ANAROCK. So I am from APG Asset Management. We are a mandated manager of Dutch pension funds. The pension fund is $700 billion US.
Wow.
And thank you. And I look after our real estate portfolio, which is about 10% of that. We have been invested in India since 2012.
2012?
Correct, yeah.
Wow.
So
nearly 13 years?
Correct, yeah, quite some time of investments. And we invest on behalf of two pools of capital. The first is a tactical pool of capital, so that covers all of our listed exposures, so the household names of, the Godrej properties, the Oberois, the DLFs, the Embassy REITs, of course. and then a strategic pool of capital, which is a long-term, predominantly privately held pool of capital. And that has covered across most of these sectors. We continue to hold that. We have listed some of our vehicles that were in that strategic pool. So India has been for a long time and will continue to be a very important part of our real estate portfolio for Asia.
Ali?
Perfect. So I work for Omers, which is a Canadian pension fund, a little bit smaller. It's about 100 million. And I work in the real estate team, which is called Oxford Properties. We have about 20% of the overall pension fund money, and Asia is about 10% of that. We've been investing in India, I think, since the mid-2010s, in a mainly infrastructure and in real estate indirectly by our in industrial exposure.
Yeah, hi, I'm Vikram. Vikram Garg, Blackstone. We're $1.2 trillion in size. Have been investing in India.
$1.2 trillion, guys.
That's the
I mean, our
AUM.
Indian economy is about $4 trillion, so a quarter of that is sitting extreme towards my left. I think if we add all of them, that's half of India's economy, sitting on these three chairs.
Oh, thank you, Anuj. And in India, we've been investing in India since 2006. Obviously, a market that we really like. In fact, in Blackstone, it's our third best in terms of size after the US and UK. And this is across both real estate and private equity. In India, we've done roughly $60 billion. I represent the real estate group. As I said, since 2006, we've now invested in office, retail, logistics, hotels, hospitality, and obviously more recently in the residential space.
Fantastic. So guys, we're going to have some good fun with these investors. As I said, it's nearly half of the Indian economy sitting on the dais other than me. Vikram, let me start with you first. Blackstone is as much about scale as it is about discipline. And, we've seen, over the last 15 years, the way that you guys have behaved. For the longest time, you did not invest. And then once you started to invest, we've seen the growth of that. My question is, what is one deal in India you are glad that you did not do?
I know you want to get me in trouble, so I'm not going to... I will say, okay, there obviously been multiple deals that we've obviously looked at a lot over the last 20 years that we've been there. And obviously a lot of deals that we passed on, but I would say that a few things that we frankly have been very focused on in terms of how we look at transactions. One is we're very large thematic investors. If we like a sector, we really try to build scale. So when we started investing, as you said, for the first 5-6 years, we actually did nothing. We made our first investment, frankly, in 2011-12 in the office sector. And we went all into that sector, at one point, and now we've obviously sold some, but at the point we were roughly 120 million square feet of office that we owned in the country. And similarly, we're now, looking at retail. We're the large, amongst the largest retail owners. We're building a large logistics platform. So I think what we've seen is that we are very large thematic investors. What we also do is when we partner with somebody, we like to, again, try and do repeat transactions. Now, as you know, we've done deals with embassies, Saladpur, the Rahejas, Hiranandani. So we've really gone ahead and backed them. And I think that's been one of our learnings is back the right partner. And the last thing I would say is we've built really strong management teams. And a lot of you people, entrepreneurs out there, obviously, one thing that we've realized is having a strong management team has really built, and having these large platforms is something that, so getting the partner right, getting the team right, I think is something that we've tried to focus on.
And one deal that you did not?
Okay, I'm not going to name it, but I think there was a large hospitality platform that we were going to look at prior to, just before COVID, which I'm glad we didn't invest in. It would have been hard, for sure.
Vikram, just continuing with you, I do remember is that when Blackstone was investing into India, one of the concerns was how are we ever going to be able to exit? We're putting in so much money into India. Who's the buyer of these assets? And then we discovered you went into the public markets and you've done exceptionally well, REIT after REIT, and then, more recently on the hospitality IPO. Has that concern gone away now that there are proper exits available? Thank you, sir.
Yeah. So, Anuj, frankly, that always used to be the question that we often always got asked by our investors. India's great. It's got growth. It's got, everything going from a strong middle class. But how do you actually exit these large investments, right? We were buying office and large office buildings. And that's when we started work on the REIT framework. We worked with the regulators, a lot of the industry body, and it took us some while to actually get to the REITs where we are. I mean, we listed the first REIT in 2019. We now have 4 REITs in the country, or we've been part of 4 REITs out of the 5. So something that has obviously done well. Having said that, we think there's still a lot more to go. The REIT market globally is roughly $3 trillion.
Wow.
And so that's a big market. In India today, between the 5 REITs, we're roughly market cap of 17 billion, right? It's still a fair amount of real estate. Let's say 20% of real estate, or the office sector in particular, is probably in the REITs, right? But there's still a long way to go in terms of, bringing more product to market, or the REITs. The other thing I'd say is what's been really encouraging, Anuj, is the domestic capital that we're seeing coming into these REITs, right? When we did Embassy in 2019, I would say 80% of the capital was foreign capital and 20% were domestic. This time when we did Knowledge Realty, which we listed 3 weeks back, it was almost 90-95% was domestic capital, which just
Can
really
you imagine, guys, 90-95% domestic capital now coming in, and
absolutely, and that is phenomenal, right?
And I heard 13 times oversubscribed.
Yes, it was
13
13 times oversubscribed. Yes. Just another statistic, when we did Embassy, there were 7,000 retail applications, right? This time around, there were 170,000.
crazy.
So that is just goes to show the strength of the market, and we think there's still tons of potential, right? And the regulator has actually played a great role in getting to where we are. We've obviously got the REITs. We've started the SM REITs, which I think for a lot of people out here in the audience could be an interesting avenue, even if you don't have the scale, to try and do what's called the small and medium REITs. It is definitely interesting. Right? I mean, as a retail investor, getting a 6-7% dividend yield, and with growth potential from rent escalations from growth, if you can get a 13-14% total return, that frankly is very, very interesting for a lot of retail investors, institutional investors. So I think it's great that it's great that we've now got 5 REITs. My view is that there's still lot more to go.
But what team here, listen to this, is that, there is so much of domestic capital. I mean, this must be news for many of the people sitting in the audience, that 7-8 years ago, when Vikram and his team listed their first REIT, which was Embassy, it was about 80% foreign capital. And now the one that they have listed last 3 weeks ago, 90-95% is domestic capital. I mean, that is how India is becoming. 15-20 years ago, Vikram, this is how perhaps China was, that there was a lot more domestic capital there. And, in India, we were only looking at foreign capital. So to your point, yes, today exits are possible. And those exits are largely coming in from domestic capital for institutions like yours.
And frankly, that just gives confidence to a lot of people,
Exactly.
like all of us on the stage out here, to
Yes.
try and deploy capital, right? And you are starting to see new players coming into the country, new institutional investors, whether it's Japanese capital, European capital, who want to kind of deploy, and knowing fully well there's a path to exit, right?
Ali, Vikram's had a successful story, but yet I hear from many institutional investors who are overseas that India is complex but rewarding. So my question to you is, from where you sit, has India now reached the mainstream for institutional capital?
I think it is. I think it has. I think there is still a long way. There's a lot of institutional investors which are completely absent from India, a lot of them which are underweight India. So I believe there is a long way to go. If you look at European investors, they have very limited exposure. The rest of Asia is just opening up. So to me, we are in the very, very beginning of a long run.
And Ali, you've been here in Singapore for a period of time, and we picked up the REITs really from Singapore, and Singapore has really perfected the art of the REIT playbook. My question to you is, what is one blind spot in Singapore's model that India should avoid repeating?
Very good question. And I would say one of the blind spots is, and India has avoided to date, some REITs are probably a little bit subscale and small. And there is this kind of vicious cycle where you're subscale, you don't trade well, you cannot issue equity, and you're kind of just humming along. To this date, the Indian REITs are relatively large, and that gives enough liquidity. The stock goes up and down, but eventually it actually settles at really reasonable value, and it allows them to grow. I like the fact that they're large. I like the fact that there is good liquidity and ability to come in and out. So I really encourage India to pursue this kind of large REIT route. I think it's much more suitable for the public market, how they're set up.
I think a very important point, guys, that subscale REITs is not the way to go forward. So any place where there are subscale REITs will have a negative impact. And I think India that way has done well. The 4 or 5 REITs that we have are really scaled up REITs. And then Vikram, you did mention about SM REITs. So I don't know whether that is contrary to what Ali is saying, because they are not really of the scale that we are up there.
Yeah, as long as you got, I would say, Anuj, as long as you've got the right assets, the right governance structure, it is something that I think, and the right vision and the right focus in terms of growth, I think it is something you obviously have to have the right safeguards, which the regulator obviously has put in place to ensure that all those safeguards are adequately built. But I do think that if you have a decent product, yes, I think it is something that people would look at.
Can I add to that? Because I think, one of the points here is that you need to distinguish in between where that source of capital is coming from. So when we evaluate the REIT market, there is a certain degree of depth in daily trading that we need to consider, of the availability of free float and so on, because the degree of the check size that we would be looking for is that substantial. But to the point about then now the growth of the domestic capital, that domestic capital is under and looking for a very different profile than us as an institutional capital. So whilst you do then have, if you just look at the inflows of capital, yes, this year to date in the Nifty, there's been an exit of international capital that's been far more weighted by the growth of domestic capital that's been coming in to infill it, and so therefore that profile of capital will have a very different
you got to have you got to have diversification, you got to have necessary safeguards, and I think the SM REIT obviously that does make it challenging, and the institutional guys like scale, right? I mean, to just give you a stat, Knowledge Realty Trust has been the largest office REIT that's got listed globally in the last 10 years in terms of size, right? So that, and that's why people are like that, because there's scale, there's liquidity, there's, the fact that there's diversification. If some market's not doing well, then you have the ability to, tap into another market. So, but yes, I think it's a product which could be interesting for smaller players. And hopefully, as I said, if they have the necessary safeguards, I think it could work.
And then, guys, there should be a big round of applause. Knowledge Realty Trust that has got listed is the largest in the last 10 years globally. We keep beating up India, but look at it, these statistics, that largest trust, real estate REIT has been listed in India at a global level in terms of the volume, in terms of the square footage that has happened. Ali, Vikram did touch about this diversification. I do want to ask you this question, is that Oxford, has gone beyond traditional offices in terms of investment. If you had to import one global asset class into India tomorrow, what would it be? Would it be life sciences? Would it be student accommodation? Would it be rental housing or something else?
I think life science has a big growth path, and I think it's very interesting. India benefits from an extremely highly educated workforce, very good availability of scientists, production facilities which are much cheaper than the rest. So I think there is a long way for life science to penetrate and develop in the market. There is already, India is dominant at the generics level. I think that you can actually move up the value chain and build a lot more.
I would say data centers, Anuj. I mean, life science is definitely a sector, but I would say data centers. I mean, what we are seeing happening with technology and AI, and given the population, the use of technology that's happening out there, the data consumption, I think that's a space which we think is going to be pretty interesting in the years to come. If you talk to all the larger hyperscalers, whether it's the Amazons and the Microsoft, they will tell you that India in the data center space is going to be big. So that for us, I would say, is probably the one area that we'd say.
You might want to share how much you've invested in data centers so far this year.
I mean, it's a big number. We just bought a business, an Asia business called AirTrunk, which was a $16 billion acquisition. So it was an Asia data center platform.
Wow, wow. And again, this is something that you should take back because data centers seems to be the next big thing, as Vikram has said, and Ali said is that it is the life sciences. So, guys, start to think differently rather than just thinking about, offices and doing one more retail mall and doing one more residential. Think about these asset classes that very astute investors are talking and saying is this is where they think India needs to continue to invest. So if you had the ability to invest, then it is data centers that one should look at carefully, look at the life sciences. And, as Sarah asked, Vikram, is the amount of money that they have invested in data centers this year itself is humongous. So, I'm going to come to you, and you've done exceptionally well as APG, as you said in the introduction, several asset classes, including retail and hospitality. My first question to you is that, as a pension fund, you think in decades. Is there confidence in India, or is there still hesitation that because we think in decades that India may be very volatile over these decades, or there's confidence that we've gone through the hump and it is moved towards maturity?
Yeah, thank you for the question. So I think, as you say, we do invest in decades, and we do see that we need to be aligned in India and India's growth and for the next decade to still continue the performance of our fund. And the reason that we do that is because we invest thematically around 5 key megatrends. And there's 2 particularly that I think play out very well for the message in India. The first is urbanization. So, I heard a stat, 30 people every minute are moving into cities in India. I mean, an incredible amount, right? And so therefore that's a very strong point, to continue. And then the second is in terms of the rising middle class. And we've spoken about it a little bit in terms of the growth of domestic capital. I see this, through our exposures, for example, in Phoenix Mills. If you talk about retail and you consider what used to be aspirational retail, it's now attainable. And that is changing the profile, that is changing the consumption story. So I think there is a lot of benefits in terms of, the tailwinds that you can invest around. I think for us, in terms of kind of where the hesitancy would be, it's more in terms of our own pool of capital, which is currently, the bar for emerging markets exposure is very high. And, we have perhaps some degree of additional hurdles that we need to underwrite new capital in emerging markets. But that's because of our own profile and our own capital growth. And that's one of the things that I would say would taper in terms of when I think about hesitancy moving forward.
And Sarah, when you say is that the bar is high to invest in emerging markets, what do you mean by that?
The bar is high in terms of what the cost of that capital is.
Ah, okay. Got it. And then Sarah, being a sort of pension fund investor, our understanding is that you are also sort of nominated with investing in some social impact real estate. And by social impact, I'm looking at my friend sitting in here, who does a huge amount of senior living. There is healthcare, there's affordable housing. Is that a format that you want to look for whilst looking at investing in asset classes in India?
Yeah, I mean, for us, sustainability is a non-negotiable. So it's one of the key four things which we are tested on alongside what the risk is and what the return is. And that for us also was why we started to build our own product. For example, if I think about the office portfolio that we've built out with Godrej Properties, the quality of that build and therefore the sustainability criteria that those assets achieved was very high. Likewise, for our investment in Lemon Tree, we're really proud of the social commitment that company has made in terms of its commitment of employment for differently abled people. We have been moving from just sustainability and ESG to impact. And impact is about delivering on the Sustainable Development Goals. And we have put 30 billion as a target to invest by 2030 in impact its space directly. And I see there to be a lot of positives, to Ali's point, in terms of health science, life sciences moving forward, that we could invest around impact moving forward. I think just at this moment in time, we don't have mandate for that in India. So that's what I would like to see. But it's probably going to take another 3 to 5 years for those sectors to become more institutional so that then capital like ourselves can be there.
And Sarah, I didn't realize it that sustainability is really that high up on the agenda. I thought it was still a fashion statement. That sustainability is important, sustainability is nice to have, and yes, it is a cool thing. But you're saying it is one of the parameters that you are judged upon.
Yeah, we invest on a diamond. There are 4 considerations: cost, return, risk, and sustainability.
Guys, again, it's extremely important because, when I've met up with the various stakeholders in this room, sustainability doesn't come up that high up, as the 4 corners of the diamond. I know, from return, risk, cost, all 3, that is what we talk, but we really don't talk about sustainability. So thank you very much, Sarah, for, explaining that it is really high up, and, they're very evolved investors. So we'll need to understand that this is coming into India as well, and investors of that maturity are looking at investing into sustainability, and it is one key point. So when you're doing your developments, make sure that sustainability is a factor in that.
Yeah, and look, I would say, you can look at that if you look at the profile of the GCCs or the MNCs which are coming in. For us, it's not just because, it's a nice shiny thing to have and we like to just tick a box. We think that ultimately, and certainly to Vikram, your point about data centers moving forward, I mean, that is what AirTrunk have been very vocal about. Your customer base, your tenants, will have their own requirements in terms of where they need to
100%.
get to for their decarbonization base. Yeah. And therefore, then, if you are building a building, it needs to be able to fit that criteria.
Anuj, if you remember in Embassy, when we actually, when we actually did the first 100 megawatt solar plant in Bangalore, and this was, frankly, a lot of our tenants actually came to us saying that they need renewable energy, right? And that's when we went out there and frankly built it, which I think was very, very important when we went out there to raise capital. And not just us deploying capital, but when we were looking to do the first REIT. And frankly, we continue to do that, whether it's in the data center space, all our warehouses today in India, we're trying to build, solar energy on the rooftop, which I think, frankly, is becoming increasingly important, whether it's whether it's solar energy, whether it's doing something with the community. I think it is a pretty important aspect of institutional investors when they look at investing with somebody.
Sarah, a lot of the people here in the audience are from tier 2, tier 3 cities. So a question on their behalf is, would Sarah look at investing into tier 2, tier 3 cities of India, or it's a complete no-no and you're mostly tier 1, Delhi, Bombay, Bangalore, Pune, Hyderabad, Chennai? Or do you think that a fund like APG would go into a tier 2, tier 3 city?
Yeah, I mean, I think there is definitely a preference for us. If you think we will invest in, we don't allocate to set geographies.
Yes.
So we can invest in any cities globally. So it's about what then is going to deliver the right scale and what is going to deliver, our best risk-adjusted return moving forward. We have invested in tier 2 and tier 3 cities, through, for example, our exposure in Lemon Tree. Also, our retail platform, you know, we've got a mall, you've got a mall in Amritsar, we've got a mall in Amritsar. So, you know, there is a certain profile of capital that we have done that. But I think it just depends, again, in terms of where that scale is, and it comes back to where the liquidity is for that, to make sure that actually, you know, you do take that profile outside of just the tier 1 cities moving forward.
So again, you know, there is appetite for tier 2, tier 3 cities, you know, as long as they scale. I mean, as Sarah said, is that they've invested in Amritsar in a mall. They've invested in Lemon Tree. You know, Lemon Tree has got obviously tier 2, tier 3, tier 4, you know, towns. So there is appetite to invest in tier 2, tier 3, but there has to be a scale of that asset class.
Yeah, I think what I would say about that is because that's, you know, driven by the fact that we would invest in companies and platforms. That's quite different from just taking, you know, an individual
Actually,
asset
that's a good
level.
point. Yes.
And therefore, you know, that's when, again, it comes to the point in terms of international capital versus domestic capital. It depends in terms of if you're investing on behalf of an operating company or a platform, or then at the asset level.
Guys, this question is going to be a very exciting question that I'm going to ask, and very relevant for 90% of the folks who are sitting in this room. I'm going to ask this question to Vikram, because what Blackstone has done, they have gone and invested and taken majority stake in a listed real estate developer who does residential for sale. Blackstone has become the majority shareholder in Kolte Patil, which is a real estate development platform in India, which builds resi as equity. They have invested for sale. Now, my question, Vikram, is I know there are a lot of people who are going to catch hold of you after this session. So, you know, there's going to be a queue as you step down from this platform. But, you know, just explain us the rationale behind this investment and the gumption, the risk to be able to go and take majority stake.
Yeah, I would say, Anuj, I mean, the big thesis obviously is the growing India, right? And the growing middle class. I think that's the big thesis, which we see, frankly, we've seen in our retail business. As you know, we're the largest retail owners. We own Nexus. We own 20 malls in the country. So we are seeing that consumption. And I think that's I would say, the big driver that we are seeing middle income growth in the country. Now, this instance obviously was, Kolte Patil was pretty interesting. And thanks to you, Anuj, who has obviously helped us negotiating this, or navigating this transaction. It was an interesting play because what we liked about the business was, one, we liked the fact that we got control. We liked the fact that we could, and like we've done with all our other businesses, build a team which had all elements from design, construction, and it was a 1,000-member team. So a big team. The second thing I'd say, a lot of the land bank was already secured, which obviously made us comfortable, because I think, you know, in the 2008-9 crisis, if you remember, we used to see spreadsheets where there's land banks, but none of that was acquired. So this was a fully acquired and paid for land bank, which I think made it interesting. The third thing I was saying, it was a very lowly levered company, which again was important because, you know, you know, one thing that you obviously got to be very careful in cycles which come in the residential space. You've got to be very disciplined about how you deploy capital. And so I would say those were the three things. And obviously from a pricing perspective, we thought it was an interesting transaction. I think what this allows us to do is hopefully scale up the platform. We'd love to do more. It's Pune as a market, but we look to try and see how we can expand that to other markets. So this is frankly our first entry into this space. We'll see how that goes.
And Vikram, just on behalf of the people who are sitting in here, is there going to be organic expansion that you're going to do, or are you going to look at inorganic expansion, i.e. M&A?
I think we look at, I think both, frankly. I think it's too early to say, what our game plan is going to be. I think we've just, frankly, not even 60 days since we bought the company. I think we're in the midst of putting our business plan. But yes, I think it's going to be, we're going to learn as we've done with all the other sectors. We're going to go slow. But over time, we would like to obviously, as I said, scale the platform, and it could be both organic and inorganic.
I think one thing which I think is really interesting about this also is then actually how you look to make an income off that, right? Like, I mean, both Alessandro and I invest a lot in multifamily elsewhere in other markets, and that's a sector that's yet to come forward with scale in India. And actually, if that could over time start to develop, that offers a very different income profile to where you get elsewhere in the markets.
Yeah, frankly, it could. I mean, I think unfortunately the spread, right, the rental yields and the cap rates are kind of,
It doesn't work.
it doesn't work for now, but it could over time. Yes, it is a market that could, frankly, could.
At some stage, it has to come, Vikram. I mean, that's a debate for some other day. But what Sarah is saying is that at some stage, it has to come, because multifamily homes, if you were to speak with, Oxford or APG or yourself in the US.
Frankly, for us, I would say after logistics today, multifamily accounts for a significant part of our portfolio globally, right? We do multifamily closer to home. We do multifamily in Australia, Japan. These guys also are pretty invested in these markets. So it is something that, frankly, I know a few players in India are trying it, and I think it's definitely something to consider.
Ali, with this morning we had a speaker who spoke to us about the geopolitics, and how the geopolitics is sort of fragmenting the various alliances, and we are starting to see that fragment the supply chain as well. So my question is, do you see Asia and India in particular, benefiting as the new sort of manufacturing industrial warehouses of the world?
Yeah, absolutely. I think the manufacturing sector is really growing. I will say, to me, it's focused partly to export, but partly on the domestic side. And what's really encouraging is the emergence of ecosystem. So you start to have a factory which maybe assembles engine, and previously, like, the engine parts were imported from Germany, but now you can supply them domestically, and then the engine block is made somewhere else, domestically again. So it creates this ecosystem of the entire supply chain, which is extremely valuable and very hard to dislodge. Where I see a little bit of a challenge is the scale of the industrial park. It's still quite small, and land aggregation, as most of you know, is quite lengthy and complicated, and that's going to be an obstacle. Infrastructure is always been a challenge, is improving. Clearly, the amount of capex that the common government is spending is helping, but I would say the land aggregation is going to be a limit on how big this industrial park can be.
Got it. Sarah, we've got in the front row the eyes and ears of the government sitting straight. My question to you is going to be if you were to advise the Indian policymakers directly, what's the one single bold reform that you would say is push it through tomorrow morning to make India irresistible to the global pension money?
Yeah, I mean, I think for us, it is about regulatory certainty and clarity over the longer term. So, we have previously been on the receiving end of when regulatory reforms have come in, like I think about RERA, for example, in 2016, that then did create some challenges for our portfolio, but then longer term, that's obviously paid off and been beneficial. So I think for us, it's about, making sure that we get a very clear, stable framework for the REITs, moving on and building on the good progress that has been made previously. But it's also then about making sure that that is included in international benchmarks. And that kind of comes back to the comment I made previously about, some hesitancy around emerging markets. Some of that is just because the benchmark doesn't actually have any exposure there. So at this moment in time, all of the capital that we have allocated in India is an off-benchmark bet for us. If it were to be more aligned to that benchmark, then that obviously helps with getting further capital flows.
Anuj, but I would say absolutely right. I think I completely agree with Sarah, but I would add that I think over the last couple of decades, we've seen enough and more, and you've been part of this entire journey. I remember I was part of the whole REIT framework, talking to the government. I think and the regulator is willing to hear. I think the fact is, RERA, for instance, obviously was, as Sarah said, a big important reform, and I think you will continue. And the good news is the government is willing to engage constantly here, even institutional investors like us. So we really appreciate what the government's done, the regulator's done, and I frankly think the next couple of decades, I think it's going to continue to happen. So.
We've only got about 5-6 minutes left. Let me start to wind down this session. Ali, I'm going to start with you. If you had to describe Indian real estate in one emoji, what would it be?
Very simple. This one.
Oh my God, guys. That is what Indian real estate is going to be. Vikram, one Indian city that surprised you in a good way.
Again, we've obviously done a lot across multiple cities, but Anuj, the one I'd say is Bhubaneswar, which I think,
guys.
We bought, and frankly, I picked the city because we've invested there, but I frankly think, to your earlier question, I think there is so much power in some of these tier 2, tier 3 cities, consumption strong, middle class. So when we bought our first mall, we were really surprised in terms of what we saw when we bought it 4 or 5 years back. Since then, sales in that mall have almost doubled since when we bought it 5 years back. So it's incredible what we are seeing and could see in some of these tier 2, tier 3 markets.
Harshal, drinks is on that table tonight, huh? Drinks is on Bhubaneswar table tonight. Sarah, one Indian sector you secretly wish you should have invested early on.
Debt.
Oh,
Couple of
Wow.
quite interesting, good track records out of a couple of partners that we haven't invested in. I say that because there's only 2 sectors that we haven't invested in Indian real estate, and that is debt and logistics.
I would have never expected that. Debt. Wow, very nice, interesting. Ali, bigger disruptor for Indian real estate. Indian real estate. Is it AI or climate change?
I would say AI is a big opportunity, and I think climate change is a big challenge to attack.
So AI, bigger opportunity, and climate change, a challenge. Interesting. Vikram, Blackstone is known for scale. Would you rather own 50 malls in India or one Times Square mall in New York?
That's an easy answer, Anuj. 50 malls in India, of course. We have 20, so we have 30 more to go. So everybody in the audience, we'd look to do more with you guys.
I'm going to ask 2 questions to you, Sarah, and end it here. The first one is safer bet for pension funds, Singapore REIT or Indian REITs? Tough one, but I'm going to put you on the spot. Safer bet for pension funds, Singapore REIT or Indian REITs?
I mean, I'm going to know my audience, and I could. I can say the answer that it may be popular in the room, maybe contrary to my boss in the Netherlands.
Thank you very much, Sarah. And the last one, if you had to sum up India's story, real estate story so far in a Netflix title, what would it be?
Well, I think to date, it's got to be The Office.
Oh, The Office, guys. That is, wow, fantastic.
But I hope that diversification will come forward, moving forward, and change that.
Thank you very much. Big round of applause to our panelists. Thank you very much.